I am going to tell you something that could get me sued, maybe even arrested if I was still under their contract. But I am retired now. I am sitting in this chair, and for the first time in 30 years, I am not wearing the tie. I took it off because I was tired of the feeling of it choking me while I smiled at you across the desk. Look at me. Does my face look familiar? It should. I was the man who shook your hand when you opened your first savings account. I was the man who congratulated you when you paid off your mortgage. And I was the man who sat quietly while the system I worked for drained your retirement fund, dollar by dollar, fee by fee, until there was nothing left but dust. My name is Robert. I worked in commercial and investment banking for 3 decades. I started as a teller, moved to branch manager, and ended my career in what they call wealth management. It sounds prestigious, doesn't it? Wealth management. It sounds like we were managing your wealth. We weren't. We were managing our revenue. You were not the client. You were the resource. I saw the video of the truck driver on this channel, the man who lost $45,000 in 12 minutes. It broke my heart, but it did not surprise me, not for 1 second, because inside the building on our screens, that man had a marker on his file. We all have markers. And today, I'm going to tell you exactly what those markers mean and how the bank decides who to help and who to feed to the wolves. This is not a conspiracy theory. This is the operational manual of the modern banking system. And if you are over the age of 60, you are their favorite target. Let's start with the first lie. The lie of the relationship manager. Do you remember when you turned 60? Maybe you received a nice letter in the mail, or a phone call from a polite young man at your local branch. He probably said something like, "Mr. Smith, we see you have been a loyal customer for 20 years. We want to invite you in for a free financial wellness checkup." It sounded nice. It sounded like gratitude. You put on your best jacket. You went to the bank. They offered you coffee. They sat you down in a glass office, not at the teller window. You felt respected. Here is what was actually happening. The bank's algorithm flagged your account, not because you are loyal, but because your liquidity, the cash sitting in your savings or checking account, hit a certain threshold. Maybe you sold a house. Maybe you received an inheritance. Or maybe, like that truck driver, you just saved every penny for 40 years. The algorithm sees that cash sitting there. To you, that is safety. To the bank, that is dead money. It is doing nothing for them. They cannot charge high fees on a savings account. So the system triggers a capture alert. The polite young man who called you, he is not a financial advisor. He is a salesman with a quota. His job is not to protect your money. His job is to move your money from the safe bucket, where it earns you interest, to the risk bucket, where it earns the bank fees. When I was a manager, every morning started with a meeting. We didn't talk about market trends. We didn't talk about helping clients. We stood in front of a whiteboard and looked at the cross-sell ratio. If you came in to deposit a check and you left without buying a new product, a credit card, a line of credit, or an investment account, my tellers got in trouble. We called you low-hanging fruit. But the worst term, the term that still makes me sick, we had a code for seniors who lived alone, widows, widowers, people whose children lived in different states. We called them orphans. An orphan is the perfect target. There is no son or daughter looking at the statements. There is no one to ask questions. So when the advisor suggests moving your entire life savings into a variable annuity with a 7% surrender charge and a 3% annual fee, the orphan just nods and signs because they trust the man in the suit. They trusted me. Let me explain the annuity trap, because this is where I saw most seniors lose their financial freedom. You are worried about outliving your money. It is a valid fear. So the bank offers you a product that guarantees income for life. It sounds perfect. You give them a lump sum, say $200,000, and they promise to pay you a monthly check until you die. Here's what they don't tell you in clear English. First, the commissions. The moment you sign that paper, the agent, the nice man who gave you coffee, gets a commission that can be as high as 7 or 8%. That is $14,000 instantly out of your pocket into the bank's revenue. Second, the surrender period. If you have a medical emergency next year, maybe you need surgery or you need to fix your roof, you cannot touch your own money. If you try to withdraw it, they hit you with a penalty. I have seen grown men cry in my office because they had $500,000 in an annuity, but they couldn't pay a $5,000 hospital bill without losing a massive chunk of their principal. We locked you in, we took your liquidity, and we called it wealth management. Now let's talk about something even darker, the safety freeze. This is happening right now to thousands of people. You try to wire money. Maybe you are buying an RV for your retirement. Maybe you are helping your grandson buy a car. It is a large transaction. Suddenly, your account is locked. You call the bank. They say it is for fraud protection. They say they are keeping you safe. Days pass, then weeks. You send documents. You visit the branch. They treat you like a criminal. They ask, "Why do you need to move this money?" as if it is not yours. Why do they do this? Under the guise of protecting seniors from scams, banks have been given legal power to freeze assets if they suspect exploitation. It sounds noble, and yes, sometimes it stops a real scammer. But more often, it is used as a retention tool. Every day your money sits in that frozen account, it is on their balance sheet. They are lending it out overnight to other banks. They are making money on your paralysis. I once had a client, a lady named Margaret. She wanted to move her funds to a local credit union because she was tired of our fees. She was perfectly sane, sharp as a tack. But when she tried to transfer the money, my supervisor told me to flag the transaction as suspicious activity. He said, "She is 80 years old. She is moving a large sum. Maybe she is being coerced." We knew she wasn't. We knew she just hated us. But by flagging it, we held on to her $2 million for another 30 days while compliance reviewed the case. That is 30 days of interest for the bank, 30 days of stress for Margaret. It is a game of friction. They make it easy to put money in and hell to get money out. And then there is the fiduciary lie. This is the most important word you need to learn today, fiduciary. A fiduciary is legally required to act in your best interest. If a product pays him a lower commission but is better for you, he must give you that product. But most of the people you talk to at a big bank are not fiduciaries. They operate under the Suitability Standard. Do you know the difference? The Suitability Standard means I can sell you a product that is suitable for you, even if it is terrible. As long as it is not illegal, I can sell it. If I have 2 investment funds to sell you, Fund A has very low fees and historically earns 8%. I get paid 0 commission. Fund B has huge fees, earns only 4%, but pays me a $5,000 bonus. If I am a fiduciary, I must give you Fund A. But if I am a bank employee under the Suitability Standard, I can sell you Fund B. I can look you in the eye, smile, and sell you the product that hurts you and helps me. And it is perfectly legal. I did it 1,000 times. I paid for my daughter's college tuition with the commissions I made from selling bad products to good people. That guilt is why I am sitting here today. That guilt is why I am speaking to you. So, what can you do? The system is rigged, but it is not unbeatable. You just have to stop playing by their rules. Here is my advice. The advice I wish I could have whispered to every person who sat across from my desk. Number 1, stop being loyal. Loyalty in banking is a one-way street. The longer you stay with one big bank, the more they take you for granted. They know you won't leave because it is a hassle to change your direct deposit. Move your money. Look at credit unions. Credit unions are nonprofits. Their goal is to serve members, not shareholders. The difference in service and fees is night and day. Number 2, separate your money. Never keep your life savings in the same institution as your checking account. If your checking account gets hacked, like the truck driver, the thieves can drain everything linked to it. Keep your serious money, your retirement nest egg, in a separate brokerage account or a Treasury Direct account completely disconnected from your debit card. Number 3, demand the F word. If you sit down with an advisor, look them in the eye and ask, "Are you a fiduciary? Will you sign a document stating you are acting as a fiduciary for all our transactions?" Watch their face. If they stutter, if they say, "Well, we operate under a best interest standard," stand up and walk out. They are salespeople, not advisors. Number 4, the trusted contact. This is crucial. Go to your bank and add a trusted contact to your file. This is not someone who can spend your money. This is someone the bank is authorized to call if they think you are being scammed. But be careful. Do not make this a joint account holder unless you absolutely trust them. A joint account holder can empty the account. A trusted contact can only be notified. I am looking at the blinds in my office. The sun is going down. For 30 years I worked in the dark. I hid the truth in fine print. I buried the risks in 60-page prospectuses that I knew you would never read. They count on your politeness. They count on the fact that you belong to a generation that respects institutions. You see a big sign, a marble lobby, a man in a suit, and you think, safety. I am here to tell you that the marble is paid for by your fees. The suit is a costume, and the safety is an illusion. The truck driver who lost everything, the bank told him it was his fault. They said he gave away his password. They washed their hands of him. But I know the internal meetings. I know that they could have stopped that transaction. I know they have software that can stop a $5 charge at a gas station if it looks weird. But they let a $40,000 wire go through to a crypto exchange in Nigeria? It is not a bug. It is a feature. Fraud is a line item in the budget. Refund customers, that is a loss. Blame customers, that is a savings. Don't be an orphan. Don't be low-hanging fruit. Take your power back. Read the fine print. Question everything. And never, ever trust a man just because he is wearing a tie. I took mine off, and I have never slept better. My name is Robert, and for the first time in my life, I am working for you. Subscribe to this channel. In the next video, I am going to show you the physical documents they ask you to sign, and I will highlight the paragraphs that give them the right to take your house. You think the mortgage is paid off? Wait until you see the line of credit clauses. Stay safe, stay alert, and keep your money where you can see it. Now that you understand the orphan strategy and the annuity trap, let's go deeper. Let's go into the rooms where the public is never invited. Let's talk about the spread and how we used your fear of inflation to rob you of your purchasing power. I remember a meeting in 2012. The economy was recovering and interest rates were low. We had a directive from the regional VP. Liquidity is a liability. Fees are assets. What does that mean in plain English? It means that if you have money sitting in a standard savings account, the bank is actually annoyed by you. You are a cost. We have to insure that deposit. We have to provide customer service for it. So we developed the friction model. Have you noticed how your bank's website changes every 6 months? How it gets harder to find the transfer out button, but the open new account button is huge and glowing? That is not bad design. That is behavioral engineering. We hired psychologists, not just bankers. We wanted to make sure that the path of least resistance for you was to keep your money exactly where we could bleed it. Let's talk about the credit card for seniors scam. We would look for customers with high credit scores and paid-off homes. We didn't want you to carry a balance, not at first. We wanted to give you a premium card with a high annual fee. We told you it gave you travel rewards and concierge service. But here is the trick. The rewards were designed to be almost impossible for a 70-year-old to redeem. Blackout dates, complicated portals, expiration codes. We knew that 80% of the points we gave you would never be used, but you kept paying that $400 annual fee because the card was heavy, it was made of metal, and it made you feel like a VIP when you put it on the table at a restaurant. We sold you status to distract you from the theft. And speaking of theft, let's talk about involuntary insurance. When you take out a small loan, or even when you open a checking account, there is often a box checked by default. It's called account protection or credit life insurance. The pitch is simple. If you die, Mr. Jones, your family won't owe the bank a dime. It sounds like a gift, but the premiums are astronomical compared to a standard term life policy. And the payout, it doesn't go to your widow. It goes directly to the bank. We were literally betting on your death and making you pay for the ticket. I have seen estates where the bank took $40,000 in insurance premiums over 10 years, only to pay itself back a $10,000 debt when the customer passed away. The family got zero. The bank got paid twice. Let's look at the reverse mortgage deception. I wasn't a mortgage broker, but I sat in the rooms where these deals were packaged. A reverse mortgage can be a tool, yes, but the way we sold it was predatory. We didn't target people who needed money for a luxury lifestyle. We targeted people who were house rich and cash poor. We knew that once you took that first draw, you were trapped. The interest compounds, the equity evaporates. We weren't helping you stay in your home. We were slowly buying your home from you for 20 cents on the dollar while you still paid for the taxes and the maintenance. We let you be the landlord for a property we already owned. I once saw an internal memo that called reverse mortgages the ultimate estate capture. It meant that by the time you died, there would be nothing left for your children. The intergenerational wealth of the American middle class was being vacuumed up into the balance sheets of 4 or 5 major banks. Now I want to tell you about the Social Security direct deposit trick. Banks love your Social Security check. It is the most reliable income stream in the world. The U.S. government never misses a payment, so we created incentives for you to switch your direct deposit to us. Get a $50 bonus, we would scream. Why? Because once that check hits our system, we own your cash flow. We know exactly when you pay your bills. We know your spending habits. We use that data to time our product offers. If we see you are spending more at pharmacies, we trigger a long-term care insurance sales call. If we see you are spending at a hardware store, we trigger a home equity line of credit offer. We are not watching your account to keep you safe from hackers. We are watching your account to see what else we can sell you. Your life is a data point. Let's discuss the overdraft protection trap. They told you it was a service. We don't want your card to be declined at the grocery store, Mr. Smith. It would be embarrassing. So they opted you into overdraft protection. But look at the math. You buy a $3 gallon of milk. You are $2 short. The bank covers you and then charges you a $35 fee. That is an interest rate of over 1,000%. If a guy on a street corner did that, he'd go to jail. When a bank does it, it's a convenience fee. I remember a young teller. She was 19, full of idealism. She came to my office crying because an old man had been hit with 6 overdraft fees in one day. He had bought 6 small items, and the bank's software reordered the transactions. Instead of processing the small $5 charges first, the system processed the biggest check, his rent, which emptied the account. Then, every small charge that followed triggered a separate $35 fee. He lost $200 in fees for being $10 short. My supervisor told the teller to stop being emotional. He said those fees paid for our Christmas bonuses. That man's dinner was our bonus. Are you starting to see the picture? Let's talk about the investment pivot. When the market is volatile, your advisor will call you. He will sound worried. The markets are shaky, Bill. We need to move you into something more stable. He isn't moving you to safety. He is moving you into managed portfolios. These are collections of mutual funds that the bank owns. Not only do you pay a fee to the advisor, but you also pay an internal expense ratio to the fund itself. You are being double charged. In a good year, the market goes up 10%. You see 5% after fees. In a bad year, the market goes down 10%. You see 15% loss after fees. The bank makes money whether you win or lose. They are the casino. You are the gambler who thinks he's playing a fair game. I want to speak directly to the trust issue. Many of you have living trusts. You think your assets are safe, but did you move your bank accounts into the name of the trust? Most people forget, and the banks don't remind you. Why? Because if you die with a regular account, it goes to probate. And if it goes to probate, the bank can hold that money for months, sometimes years, while the lawyers argue. Again, that is idle cash that they can use. They want the process to be slow. They want the friction. I have sat in probate hearings where the bank's lawyers argued over a signature on a card from 1975 just to delay the release of $100,000 to a grieving daughter. It's a cold, calculated delay tactic. Let's talk about the digital push. The banks are closing branches everywhere. They tell you it's because everyone is going mobile. That's a lie. They are closing branches because they want to remove the human element. If you have a problem, they want you to talk to a chatbot. They want you to wait on hold for 3 hours. Why? Because most seniors will give up. If you can't walk into a building and look a man in the eye, you are less likely to fight for your money. They are digitizing the friction model. They are making it so frustrating to complain that you eventually just accept the fees as a fact of life. Well, it's not a fact of life. It's a strategy. I worked with a man. Let's call him Gary. Gary was a whale. He had $5 million in our private banking wing. Gary got the best service, no fees, free tickets to the theater, gold-plated everything. Who paid for Gary's free tickets? You did. The banking system is a massive wealth transfer machine. It takes pennies from millions of average customers through fees and low interest rates, and it uses that money to provide concierge services to the ultra-wealthy and record profits for shareholders. You are subsidizing the people who already have more than they can spend. I can still hear the sound of the vault door closing at the end of the day. It's a heavy, final sound. For years, I thought that sound meant the money was safe. Now I know it meant the truth was locked inside. I'm tired of being a part of the vault. If you are listening to this and you feel a pit in your stomach, good. That is your intuition telling you that you have been too quiet. You have been too polite. When you go into your bank next week, don't be the nice senior. Be the informed customer. Ask for a full list of every fee you paid in the last 12 months, not just the ones on the front page. Ask for the disclosure of indirect compensation. Ask them how much they made from the funds they recommended to you. Watch them squirm. They aren't used to people knowing the vocabulary. The truck driver who lost $45,000, he didn't just lose money. He lost his sleep. He lost his dignity. He felt stupid. But he wasn't stupid. The system is designed to be smarter than any one person. It is a machine with 1,000 arms, all reaching for your pocket at once. I spent 30 years as one of those arms. I can't give the money back. I can't undo the annuity trap for the thousands of Margarets and Bills I sold them to. But I can give you the map. I can show you where the traps are hidden. In the next part of this documentary, I'm going to show you the red flags that we used to identify who was cognitively declining. Yes, we had a list. If you repeated a question twice, we made a note. If you forgot your PIN once, we made a note. And those notes weren't to help you. They were to determine how aggressive we could be with our sales tactics. Because a confused customer is a profitable customer. It's a dark world inside those marble walls. But light is the only thing the bank is afraid of, because they can't charge a fee on the truth. Stay tuned, stay angry, and for heaven's sake, take your money out of the big 4 banks. My name is Robert. I was a banker. Now I am a witness. Share this video with every senior you know, every veteran, every person who worked 40 years to build a life. They are coming for the orphans. Don't let yourself be one of them.